Hello everyone, I hope everyone's having a wonderful day. Today I want to talk about a couple stocks that I just added to my portfolio. Actually, one stock I added to my portfolio. The other one I'm probably going to get, but I think I can get a better price. If you see my one video on best time to buy a stock, judging by the technique that I use in that, I think the other stock that I want to talk about today is a little bit expensive, and I might be able to get a better price before the X date. That's the day that you have to own it if you want to get the dividend. And if you know my channel, I'm all about dividends. And if you didn't see my last video, my high yield dividend challenge video, I explained in that one what happened to my nose. Basically, I'm just having it was a sunburn. It was a really bad sunburn from like 20 years ago. Had that removed. They're doing a biopsy on it, just making sure it's not cancerous. I'm not too worried about it. But anyway, that's why I have a Band-Aid on my nose. The first stock I want to talk about today, it's actually the one that I bought. I actually purchased it on the X date. That means I do not get the dividend, not until the next payout. As long as I hold it, I'll get the dividend next month and the month after that, for however I own it. So the reason I bought the stock on the X date was because, in all honesty, I could tell the stock price, it's a little bit high at the moment. And if I buy it on the X date, I know I'm pretty much going to get a decreased price. Because market makers lower the price to kind of incentivize people holding the stock so they don't really take advantage of the companies. A lot of people out there, they will buy stocks pre-X date, and then when the X date hits, they will sell it. Well, this only works really if either the dividend you're getting is more than the loss if you sell it. I know this is very confusing, but basically, what's the easiest way to explain this? If they don't lower the price on the X date, it's very easy to buy it pre-X date and then sell it and get the dividend. So you would be getting a dividend and, freeing up your cash by selling the stock. That's the reason that you'll see stock prices go down on the X date. And this stock was no exception. It actually went down 2.2%. So I bought 50 shares, and 2.2% savings I'd rather have, because now I'm getting, I'm not getting that first initial dividend, but I was able to buy basically future shares as long as I hold it. At a discounted rate of 2.2%. Now, I'm sure everything I just said is very confusing and complicated, and I don't expect everyone to get this methodical with their investing style and all that. But keep in mind, I don't have a day job. I have a lot of free time to investigate and look at stocks all the time. So I'm able to do this. But I'm kind of hopefully sharing this information with you to help you guys out. So this stock that I'm talking about that I bought is Brookfield Real Assets Income Fund. RA is the ticker. This is another close-ended fund. I talk about them all the time. I love close-ended funds. They're perfect for someone like me that's retired and they need their stocks to work for them, meaning dividends. I live off of the dividends since I don't have a day job anymore. It primarily invests in securities and instruments of real estate, infrastructure, and natural resources. With their monthly paying dividend of 19.9 cents and a stock price in the high $21 range, this puts their dividend yield at a fat 11% annually. And as I said, they do pay monthly. I love monthly paying stocks because you're able to compound your money, your investment so much quicker when you get paid every month. You can just roll that back in every month. Now, this closed-ended fund is under the umbrella of Brookfield Asset Management Incorporated. BAM is the ticker. This makes the fourth stock from Brookfield that I own. I'm not really here to talk about the other companies right now, but it's a BEP, BIP, and BPY are the tickers. These three companies I just mentioned cover real estate and renewable energies. As far as BAM, basically the mother company, if you will, just take a look at this max chart. This is their chart through all of time since they went public. Based on this chart and the size of the assets that are managed, I'm guessing there's some really good management in this company. Now, the second company I want to talk about is Ellington Financial. EFC is the ticker. They are an LLC that acquire and manage mortgage, consumer, corporate assets in the US. And recently, they just announced a huge increase in their dividend payout, 40%. I know that sounds crazy. Actually, it's not that crazy because pre-COVID, they were already at this rate, which is 14 cents. Currently, they're at 10 cents. But because of COVID, like so many other companies, they did cut their dividend. I believe it was down to 8 cents. Since then, though, they've really worked hard to bring their dividend back. Their stock price right now is in the mid to high $17 range. I want to see how their stock price does in the next few days, in all honesty. I think, I don't want to say it's expensive, but as far as the strength of the stock, it's very high. I think there's a good probability you could probably pick this stock up in the mid $16 range. It was just there last week. And anyway, we'll see what happens. But even if the stock price does not go down and you buy it in the mid $17 range, you're still going to have a dividend yield of just under 10%. That's fantastic. If you want in on this stock and you want to get the next dividend, which also is monthly, you need to buy it before April 29th. That's when it goes ex-date. So as long as you own it by the 29th, you will get the dividend. Something I want to talk about just real quickly. I still get a lot of uncertainty from people in this style of investing, primarily high dividend yield stocks. The main reason that I buy these types of stocks is to live off of. That being said, there's nothing wrong with putting some of these into a portfolio along with some high growth stocks, which I do own as well, like in my IRA and ETFs. Higher dividend paying stocks can really help jumpstart any portfolio. And something else to keep in mind, the last company I was just talking about, Ellington Financial, if you look at their institutional ownership, big companies like Vanguard and BlackRock, they own millions of shares. Imagine that, millions of shares. Can you imagine what these guys are making in dividends from some of these funds or some of these companies that pay high dividend yields? So for me to invest like 100 shares in some of these companies, when I see that, like Vanguard owns, like 20 million shares, that's nothing. I've only gotten burned once on a high yield stock, and it was when I was new. I didn't know how to look at the financials, and it was like a 17% dividend Chinese shipping company. And oh my God, it was not sustainable whatsoever, and I ended up cutting my losses because the stock was going down along with their dividend, and I lost about 50% of my money. Luckily, it was just a couple $100. Any of these stocks that I share with you guys, it's possible that, some type of world catastrophe can happen and, the company is going to go bye-bye. That being said, none of the companies that I have in any of my portfolios have done that yet. And the bigger your portfolio gets, the safer you are. Through diversifying, if you think about this, like let's say, I'm not saying you should own 100 stocks, but if you owned like 100 stocks and one of those companies went completely bankrupt, that's only 1% of your portfolio. And if all of them are paying dividends, how quickly do you think it's going to take to, get 1% of your portfolio back? If your entire portfolio was averaging 8%, that's less than 2 months. I guess what I'm trying to say is because I took a leap of faith years ago and started investing in a lot of these companies, I am now able to not have to work. For anyone that is still unsure on getting started, look at my high yield dividend challenge. I'll have the next video out on Saturday. I basically show you how easy it is to start investing with just $10 a week. You could basically take any money that you put into these types of stocks as money you're not afraid to lose. No one likes to lose money, but let's say you got an extra $10, you got an extra $20 you just found in your pocket before you're doing your laundry or something. Put that aside and say, you know what? I'm gonna put this into the market and see what happens. Because if you ask me, it's completely worth it. Obviously, I'm a little biased. I love investing because it affords me, time. You can't get time back. I love having time. When I'm done editing this video, I'm going to pick up one of my 30 guitars that I have and play some music. I mean, I can go watch a movie. I can do whatever the hell I want. I love it. It's fantastic. I love sharing this information with you guys, and trying to grow this channel is honestly, it's my new challenge in life. Just because I'm retired doesn't mean I want to sit on my ass playing video games all day. I mean, there's got to be more to life than that, right? I love giving back. I love communicating with people that I've never met before. It's awesome. It's so awesome. So thank you everybody for watching these videos, giving me feedback in the comments. I love hearing from every one of you. That being said, I am trying to grow this channel. If you're finding any value, could you hit the like button? Obviously, it helps me out a lot, so I can get out to a bigger audience. All this being said, I'm going to stop because I'm starting to ramble. I'm just in a really great mood, and I love sharing this information with all of you. So please catch me back in a couple days on Saturday when I do my next chapter of my high yield dividend challenge. Until then, I will see you later. I hope you have a wonderful week. Love you. Bye-bye.